Hello and welcome to the cryptocurrency news channel. Well, the Fed is on the offensive again and it's attacking crypto. It's not just attacking crypto, it's attacking all asset classes. As they have announced, there's going to be required more interest rate hikes to cool down inflation. So, in other words, they require more minerals. Actually, they don't require more minerals. There's too many damn minerals out there. That's why the inflation is actually happening right now. It's the fact that people are still spending those minerals and there's too much mineral spending that they have to actually raise rates to cool the mineral spending down. But they looked at the PCEP inflation, and I think this will actually affect the markets. I don't know if they'll affect it going into the weekend, but definitely next week outlook does not actually look nearly as good as I thought it would be because they just told the markets they're going to hike their rates at the end of the month. Now, I still think they're going to do a 25-point raise because they've already gone down to 25, and I don't think they'll boost it up to 50. I think that would put the economy in kind of a panic, but I do think they will have 25-point rate hikes for at least the next 2 or 3 times. I think they originally were supposed to stop after March, but I think they'll do March, they'll do May, and they'll probably do June as well. So at least 3 more rate hikes of 25%, bringing us up to a 5.5% interest rate, which is around their 5.4 target. Now they might rise it again if inflation keeps going high, but people are spending those minerals and Vespane gas, and that's why they actually need to do it. So they are assaulting the markets once again. Like I said, I don't think the markets are actually going to recover until in the fall, and maybe we'll get a fall bull run leading into the winter. We'll probably have a short break in the winter, then next spring we'll have our run after the halving. That's really what I'm looking forward to, but this kind of dashes my hopes almost for a midsummer bull run. I'm still hoping it'll happen, but the prospects for it are getting worse and worse because of what the Fed is doing and what they are actually projecting. And it's because people are spending too much money. And I don't know if you got the StarCraft reference, but it's people are basically spending way too much money, and the Fed does actually need to bring it down. A lot of the consumer goods will probably be going up in price. Gas is so it basically verges around $80 for a long time. I don't think that's going to really change with the cap and trade and everything. And plus, there's other sources of oil out there. So the thing is, inflation is going to persist for a little bit longer, unfortunately. And if you're looking for a moon moment, you better be looking for really big bouts of news coming up or whales pumping, because I don't think the general overall economy is very good for pumping. We had a positive day on Friday, but that doesn't really mean much because I think the news going into the weekend is actually fairly bad. We might see a dip over the weekend, but yesterday basically we lost a lot of points on the crypto market more than the stock market because Silvergate went down, and that actually caused some kind of liquidations of longs. A lot of longs got liquidated, and so we went down 1,000 points. I don't expect that again, but overall it is bearish going into next week, unfortunately. So that's the news for today. Let me know what you think. Like and subscribe, hit that bell notifications button. Thank you and have a nice day.